market did open weak yesterday. We kind of opened up, sold off immediately, went into negative territory, and then the markets really kind of found some ground and then rallied into the end of the day. This morning, futures are pointing higher again, looking for a continuation of that rally. Here's what you need to know before the bell this morning. We've had a very nice sell-off. We've had this 5% correction in the market, something we were talking about back in July. We said, hey, we're going to get this 5%, 3 to a 5% correction, completely normal within any given year. Came down, really almost tested the 100-day moving average. We got within a stone's throw of the 100-day moving average, and I guess it depends on who's throwing the stone and how far they can throw it, but we got close. whatever that actually means, a stone's throw, how far that distance is, we got very close to that. Market did rally a bit yesterday. Again, we said, the market did open weak yesterday. We kind of opened up, sold off immediately, went into negative territory, and then the markets really kind of found some ground and then rallied into the end of the day. This morning, futures are pointing higher again, looking for a continuation of that rally. We were oversold enough here, and this has been the point of this rally, is that we were very oversold here on a short-term basis, so that rally was expected. We have not triggered a buy signal yet either. So again, while we get this rally at this point, we've got a couple of points of resistance that are coming up very quickly, and that's going to be the convergence of the 20-day and the 50-day moving average. That is creeping up on us here pretty quick. So again, somewhere around this 4,400 level, 4,450, somewhere around there, market's going to run into kind of a cluster of resistance. So what I would expect here is a bit of a rally, another potential pullback, and that'll probably give you a decent opportunity to add some exposure to your portfolio. That should finish this cycle of this correction sometime in mid-September-ish, so to speak, and then that will set us up for that typical kind of October, November, December. Now, importantly, while this is going on, we're going to see probably a continued little pickup here in volatility. So normally, kind of seasonally speaking, between September and October of every year, you kind of get a pickup in volatility. So price movements are going to bounce around different places. It's going to be a little bit more volatile, a little bit more of a struggle trying to find an entry point, but it's going to be kind of picking spots here over the next, really kind of 2, 3, 4 weeks as we get ready for that kind of end of the year push. And again, as we said, so many hedge funds and mutual funds, etc., are kind of underwater this year. They're going to have to be playing kind of catch up in terms of performance. That's going to kind of push assets into the markets in towards the end of the year. So, that's kind of the game plan right now, so to speak. There's no guarantee the market just doesn't immediately surge and go right back to all-time highs. That could certainly happen. It could also come down here and roll over and correct in the next couple of days and then have a rally. So how this actually plays out in terms of a timing thing is always kind of up in the air, but the general tendency should be for a bit of a correction here and then this rally over the next at least week or so as we get ready to go into the month of September. The other side of this also has been really taking a look at what's happening with commodities in general. Gold and again, this has kind of been interesting because we've had concerns about rising inflation here as of late. Interest rates have been ticking up. Gold prices continuing to sell off. So again, that really hasn't traded into the idea of higher interest rates, higher inflation. But, again, gold remains under pressure here. Oil prices also have had a very nice run here. We're back to pretty overbought levels, have just recently triggered a sell signal on oil prices as well. So that should suggest that we should get some relief in oil prices here soon. This has been one of the kind of contributors to pushing up inflation pressures, also causing interest rates to rise here a bit because of concerns about a resurgence of inflation. We're probably through this run in oil prices, get another correction, probably down to the mid-70s in oil prices. That'll pull some relief out of the market as well in terms of inflationary pressures, kind of a downtick there, should pull interest rates down as well. Again, kind of watch that sell signal on oil prices. That's what you need to know before the bell this morning.